Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our stock market weekly recap for March 18th through the 22nd, 2019. It's the going into the last week here of March. I'm excited. The first quarter of the year is knocked out. We're going to start off the video taking a look at last week's changes, which is up right now. S&P 500 up 2.89, Dow Jones up 1.57, NASDAQ up 3.79, my portfolio at 3.81. So we were very positive last week. We were hitting highs. Even on Friday, we had many stocks hitting 52-week highs. I had my phone going off most of the day. New stocks hitting 52-week highs. So we are pulling back here slightly here on Friday. Do not get discouraged. This happens. We have been on the run up, and we'll take a look at that. We're going to go over the four main indexes, the changes for the week, take a look at the entire S&P 500, what stocks went up, what stocks went down, rates remain unchanged. Fed came out Wednesday. We'll discuss a little bit about that. That does not help banks at all because they loan money out with higher rates, means more money. But real estate investment trusts, those REITs, they're the opposite. Lower rates, mortgages remaining the same. That means good for financials, for real estate investment, and those REITs go higher. So that's a good balance there. We're going to take a look here at the dollar, silver, gold, bonds, and mortgage rate. So if you are brand new to the channel, hit that subscribe button below. If you do enjoy the video, find it helpful, hit the thumbs up. And if you have any comments, questions, going over anything in today's video, want to drop some information below that took place this week that's not covered, drop it below. I always like to share information with everyone, and I like when other subscribers and viewers share information below. I just learned about some other information. So that is it. Let's go ahead and get into it. So we've already covered what happened last week. Pretty positive, everything up over 1.5% there, with NASDAQ in my portfolio and the S&P hitting almost 3% or higher. This week we had a bit of a pullback, 5-day change, down 0.77%. This is not too bad, 54 points off. After we've been on a run up here, year to date, we have had nothing but consecutive green. January 7.87, February up 2.97. Currently here in March, we're going to be ending March next week, but we're still positive. Remember what happened last year in March? We plummeted off the face. We just went on a down streak last year. If we take a look here at the 1 year, it's not going to show us a really good chart here, but here we go, 2018. Look at this. We dropped off against once again here in March. So we are doing quite well. Rates remain the same. That's definitely going to help out the market. Real estate investment trusts, other, companies that have debt. So S&P 500 year to date 11.72. Dow Jones this week, this one's sold off second place right now, right behind the Russell 2000. 5-day change for the Dow Jones, down 1.34%. Year to date here up 9.32%. Boeing hurt this one this week. Boeing fell down pretty hard here. You can see 2.83% here on Friday, but for the week here, Boeing down 4.44. This is one of those companies that just got hammered this week as they got grounded, and China's kind of cutting their deal out. So kind of jumping back here at the NASDAQ. NASDAQ actually performed one of the best of the main indexes, only down 0.6%. So they're the best performer of the main indexes here, and the worst performer here is the Russell 2000, losing 3.06 for the year, or for the week, year to date up 11.67. They are in second place now, and the NASDAQ has beat them out now. NASDAQ is the leader currently at 15.18%, followed right behind by the S&P and then the Russell 2000. And then the last place here, we have the Dow Jones. Now, stock futures are currently looking negative. I would expect us to gap down a little bit lower on Monday. So if you guys are looking to buy, if you guys are averaging in for next week, Monday seems like a great day to be averaging in. That is not, that's just my opinion. And, of course, every Monday I add my new equity into my M1 Finance Roth IRA. So that is exactly what I'm going to be doing, is averaging in there. Some of the most active stocks here in the after hours that have moved down: PG&E Corp down 0.62%, Ford down 0.35%, Bank of America. So financials there. Watch for financials and tech. See what it's doing here in the after hours. So Bank of America dropping down, General Electric utilities. Utilities did really well on Friday. So here we're going to be taking a look here. This is the Friday chart. Utilities, take a look at Duke Energy, Southern Company, and many others, Edison International, ED, many others. So utilities did really well. Coca-Cola, Pepsi, those consumer goods really well as well. AT&T and Verizon, those sort of really stood out here on Friday. Now, taking a look at the week performance, it's actually not that bad. Google up 1.46, Microsoft remaining up about 1%, Twitter out there up 5.77%, Nvidia up 4.53, Amazon, Home Depot, Lowe's, Apple 2.65. Apple was my biggest equity gain that kept my portfolio afloat this week. Pepsi and Coca-Cola, I've recently bought into Coca-Cola just a few weeks ago at what I believe was a good buying opportunity at those lows. Pepsi at 4.38%, so continuing higher. We have Duke and Southern Company here up. Just basically, Friday really helped them out, probably because investors were taking profits. A lot of that is taking profits. Fed came out Wednesday and said, hey, we're not going to be raising rates. Rates are going to remain unchanged for the remainder of the year, maybe until the end of, maybe November, December, something along those lines. They don't exactly know. We may have something change. But I think Thursday, people weren't expecting the stock market to take off here on Thursday. If we take a look here at the S&P 500, look at this rally after the Fed came out. We gapped down lower, we opened low, but then we shot up, gaining over 1% for the day on Thursday. Investors sold off. We gapped lower on Friday as investors took profits, and they're just kind of waiting for the weekend. A lot of investors like to take profits on Friday, and that's perfectly fine here. If we gap down a little bit on Monday, that's going to be perfectly normal as investors are kind of looking at, weighing their options, taking a look what's out there and available in order to buy in. So again, Boeing, let's see, I don't know if we took a look at financials. So financials, 4.84%. You can see JP Morgan, Wells Fargo, Bank of America, Citibank, all slammed this week. I knew a few investors out there in the dividend Facebook groups and different chats. They were saying Bank of America hasn't performed. It really bumped up with the rest of the market, and Bank of America got slammed this week, nearly 8% down. So I know they're feeling it pretty well over there. So financials, ETF here, ticker symbol XLF, down 4.84. Home builders with mortgage rates remaining unchanged. Take a look at that reverse. Tuesday started to sell off hard, down 1%. Wednesday sold off, down hard for the day. They just continued plummeting. They waited. Fed came out. Hey, rates are remaining unchanged. We'll look at that reversal. 2% there on Thursday, just jumping, and it sold off here on Friday. So basically did a 180 there, down 0.76 for the week. Year today up 15.87%, so still really well there. Boeing came out there, got grounded. I'm not sure if the news on Monday for Boeing came out that they were grounded, but let's see, they investigated the approval, and yeah, basically. I know there was something with China as well. I believe China has considered removing their 737 MAX deal, so we shall see how that sort of plays out. I know there's a lot of volatility here with Boeing. So for the week, it is down 4.44%. Tesla has been super rocky this week. I was kind of watching this one. I'm actually kind of interested in where Tesla is going to stop. I've seen a lot of investors taking a target at 250. As a way, there's been a back and forth with Elon and the SEC, so that's kind of dragging this, and this has gone on since last year. Remember when, Twitter and tweets and all sorts of, so here Friday down 3.46 in a single day, down for the week 3.96%. So very interesting. Tesla has not had a great year so far, down 20.51%. But if you believe that 264 to 65 is a good buying point, let me know in the comment section. Are you guys interested in Tesla? I think it's an interesting company, and I think it has more growth potential in the future as it expands into the services and parts. Ford came out saying that they're going to be increasing their SUV by 20%. That helped Ford out there on Thursday, bumping them up 2.17%. Year 5-day change up 1.3. Year-to-date change 11.63. I've seen a lot of investors jumping into Ford right now. I think it's one of those stocks. It's not really a dividend growth stocks. It's more just a kind of a buy for that dividend yield, buy for the income, basically the income. FedEx here came out on Wednesday early morning pre-market, or announced their earnings, missed revenue, plummeted down 3.5%, made a little bit of a return here on Thursday, but lost all of it plus more on Friday, down for the week 2.24, up for the year 7.85%. Now, my big winners this week, I thought I was actually going to come out much further ahead than I actually came out. So I was up, 5-6% here on Thursday at closing. If you follow me over on Facebook, I had posted that I was planning on actually taking profits on Apple at 187 going into the Fed, but then I kind of waited. I took a look at, I don't believe the Fed's going to be coming out and raising rates. There's no current volatility from the trade war, so I don't believe there's going to be a whole lot of volatility there in Apple, and it's still selling it off at 187. Apple went all the way up this week, hit about 194, I believe, before 194, 195. Actually, look at this. 195 is right there. So they broke. Looks like they closed at 195.09. So not sure what the day volatility is here. Let's see if it shows as far as, okay, here we go. So Apple broke 187 today and then retreated all the way back down, closing at 191.05. So Apple had a lot of volatility today. I thought that was going to be a big winner in my portfolio. Apple's what mainly kept my portfolio afloat this week. I came out positive. General Mills was my second winner for the week, up 6.8% here. General Mills came out with their earnings, did really well. This is one I started buying back in, I believe, October, November timeframe. I made a video, stocks I'm looking to buy. This was on my list due to their financials, where they were going, the recent acquisition and guidance kind of going forward. They were doing a big turnaround. Year to date, this one is one of my big winners for the year, up 30.3%. Oil, about flat this week, up 0.25%. They have came back up off their lows. A lot of investors are looking at 1250, I believe, as sort of a stall point here. We can see, the resistance level here, 1250. So yeah, that's that resistance point that a lot of investors are kind of taking a look at. This could be a good time for them to, get out of it at this point. So this is probably just profit taking here. Over to the dollar. So when the stock market is a little bit rocky and the Fed comes out that they're not going to be raising rates, their dollar kind of plummeted there, but then kind of recovered towards the end of the week. So we started the week at 96.58. We ended at 96.55. So basically flat for the week there on the dollar. Silver up this week and gold positive this week. So both silver and gold, when you got the Fed coming out, a lot of the Fed, they say the Fed doesn't have a whole lot of power, but look at the power the Fed has in the market and in gold and silver, just the whole way that they come out. They can make an announcement in reverse, do a complete 180 there. Bonds up almost 1% this week, 0.9% for the bonds. Now, because the Fed did not raise rates, we can see here that the U.S. Treasuries begin to kind of flatten out. Last week they were at, let's see, I have my notes up here on the left. You guys can't see it, but 30-year was at 3.02, 10-year was at 2.59, the 5-year was at 2.4, and the 3-month was at 2.39. So the 3-month and has basically remained about the same, but the 5-year has came down, and that has a lot of investors worried about that yield curve here on Friday. That was the biggest news that was getting pushed out there, but it's not a big deal. This has happened before back in November, December time frame. It was a huge deal back then. It's a huge deal today. It'll get blown over. If you guys have 10, 20, 30 years to go, 40, 50 years to go in your stock market, a little bit of volatility is going to allow you to average in at a lower cost, and over the long term, it's going to play out well. Mortgage rates are coming back down, so I'm looking to refinance my duplex. I've been kind of pushing this off because I want to see how low these rates can go. I'm not losing anything. I'm actually getting extra income every month off my rent because my duplex rents out for about $1,600 every month, and I don't have a mortgage on it. So besides utilities, little items here and there. Everything else, like $1,000, is just straight cash flow. So I'm just letting that collect for right now until I have some other deal in the way that I need the cash for, and I can always refinance and get that. So last week's rates were, let's see here, last week's was 4.45. This week we had the national average at 4.34. Betterment is still remaining there, 4.25. So definitely check them out. And I think, yeah, that's basically all for this week. If you guys want to hang out, go over some of the news I posted over on Facebook. You guys can definitely do that. I posted my week buys for last week. So I bought AbbVie, Cardinal Health, Altria, and AT&T on Monday. AbbVie is coming back. I'm not sure how. Let's see here. Taking a look here. AbbVie down 1.94 for the week. That's fine. That allows me to kind of keep buying them back in here this next Monday. Cardinal Health, Altria. Altria has done a 180 inside the portfolio. AT&T also at a good buying point, anywhere below $30 or $30 range and below is where I've been kind of picking them more up. I got paid a whole swell of dividends. Main Street Capital, Consolidated Edison, Kellogg's, Johnson & Johnson, Triple M here, $14.51 of just straight dividends invested into the market here. Now, all of this did not get invested. I had some cash remaining left over because I did not plan for some dividends to roll in there on Friday. China, the trade deal got pushed off until April and July. That pushed China a little bit higher. That pushed, kind of pushed the market, kind of edged it along, kind of just rolling, pushing the problem down the street a little bit. I made a video as to why I will not be using the M1 Standard, the M1 Plus. It's a big no for me. I'm not going to be using the service. I went over what I am using and will continue to use going forward, which is going to generate me more cash Wednesday. So I put this out 10 o'clock on Wednesday, Pacific time. I'm over here on the West Coast. I came out saying, hey, I'm considering selling off 30 shares of my Apple. I bought at 162. It would take a profit about $737 at the $187 price. And then I kind of considered the Fed coming out later. Basically 99% chance there is not going to be a change. I don't know why I said change, but I was thinking change. They're not going to be raising a rate. Plus, there's really nothing new on the trade war. So if I sold, could I possibly rebuy back at 181? I don't believe there's going to be another pullback. So I know there's going to be some resistance at that 190, 195 level. If we break through it, which we've done, we broke through Apple this week. We went all the way to 197 here on Friday, and then we settled here at 191. We broke through that resistance. I believe we'll continue to go higher and push it here into the future. Fed came out. We talked about that. Rates remain unchanged. General Mills up 2.2% for their earnings for the day. Main Street Capital, Consolidated Edison, Kellogg's, Stanley Black & Decker, all of these stocks here remain in the portfolio. They were paid out on Monday, so they did not get reinvested into Monday's buys. I wasn't tracking them, and they made up $10.04. This $10.04 went out there and purchased CenturyLink for me at $11.82. So CenturyLink is that unloved company here. I think CenturyLink's at a great buying point right now. I know we're considering using them as their tier one. We use Spectrum, we've used Hunter. I'm in telecommunications. So we work with Cisco, we work with CenturyLink, Comcast, different telecommunications services out there. And CenturyLink is one of those. If you take a look at any of those tier 2 providers who do your servicing, they all run through fiber, which is mainly CenturyLink there. So CenturyLink at this $12 point after they've already cut their dividend, I believe it's a great buying opportunity. That means their dividend is at a safer buying point right now because of the cut. When I looked at it with free cash flow, when I looked at it with earnings, I thought right at this buying point, I could see them going high as back into that $15, $17 point. Their their 200-day moving average is about $18 point. So CenturyLink has much more room to grow than fall, in my opinion. Boeing, some heavy wins. So Boeing's actually out there, sort of going the EA route where they're selling DLC packs. If you want some extra equipment for your planes, they'll sell you something. It just costs a little bit extra. So they definitely took a little bit of a book. They took something away from EA there, DLC packs. So glad I stayed long on Apple. Apple continuing to move higher. And Friday, bit of a cool off, and that is completely normal. So that is basically it. So this week we had again the S&P 500 selling off 0.77, Dow Jones down 1.34, the Nasdaq down 0.6, and then my portfolio moving up about 0.59% this week. Basically helped from Apple's move higher. Apple makes up 25-30% of my portfolio, so it really helps out everything there. And then General Mills doing really well as a bunch of other stocks here. So that is basically it. We are at 20 minutes right now. And that is basically all I wanted to cover in today's video. If there is anything else you guys would like covered in these videos, drop it in the comment section below. But otherwise, if you are brand new to the channel, have not yet subscribed, hit that subscribe button below. I really appreciate all your guys' subscriptions. If you guys ever have questions, comments, drop it below. I always read and reply to all of them. And if you did like this video, hit that thumbs up. If you didn't like the video, let me know in the comment section below what I can do to improve these videos. And that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye-bye.